Let's talk about the target date fund. This is a great way to save and invest for retirement. You can have a diversified portfolio, you can manage your risk over time, and you do it all in a one-stop shop solution. But there are things you need to know, and I want to talk through all of that with you in this video right now. All right, so welcome back to my channel. My name is Joshua, and here we talk about money. And so why should you care what I have to say? Well, maybe you shouldn't, but I did build and sell my tech company, and this showed me a ton about money. I learned a lot of lessons, and I share those lessons with you right here every single week. If that sounds interesting, I would love for you to consider hitting the subscribe button. It is right down there. It takes 2 seconds. Join us for content like this every single week. I'd really appreciate it. So let's talk about the target date fund and break that phrase down. And it's really 3 parts. Target, this is basically your goal, which is retirement. You work so hard and one day you don't want to work anymore. You want to have accumulated enough assets and enough wealth where you have all your time back and you can do with it what you please. But most people actually don't know when they can retire or how much they need to retire. And that's a video for another day. But I saw a headline this morning actually that shows 50% of my generation, millennials, they are grossly underestimating how much they need for retirement. In fact, the number that they think is $300,000. And I'm here to tell you that is not enough money. You will be broke. In fact, they say that you need about $1.8 million in retirement to have similar income as the average in those retirement years. And so you have to do some planning and think through these. And it starts with this idea of maybe a target date fund. So you know your target is retirement. Let's talk about the date. The next word in the phrase is date, which simply means when in the world can I retire? And if you don't know, do not worry. I didn't know either. But the rule of thumb is really around the age of 65 or a little bit older. And that's because that's when some of the tax policies and rules around fees and things of accessing your retirement savings and investments kind of taper off, and you can begin to think about that part of your life. So for someone like myself who is 35 years old, that means I have about 30 years, 3 decades, God willing, until I am 65, and that's kind of in that realm of retirement. That puts me somewhere in the years between 2050 and 2055. And the reason that's important is if you go into your 401k, or if you look at these types of target date funds, they typically have a year associated with them. And that year is based on that date which I could be retiring, on or near the retirement date. Does that make sense? So 2040, 2045, 2055, and you'll see these out over time. And that last word is fund, which is simply a way to buy and have and hold assets. So you can think of a mutual fund, an exchange traded fund, a hedge fund. It's just a collection of things that you are invested in, and together those represent the goal of retiring with these assets by a certain date. Okay, all right, but what makes these unique or special? Well, here is the key. As you age, your risk tolerance goes down. So that means the things that you hold and invest in inside the fund, they need to adjust as time goes on, as those decades go on. Because right now I can take risks. I can buy a bunch of stocks and have high growth tech names, and I can be in some more riskier assets. But when I'm 62, I can't do that anymore, simply because time is not on my side. If the market crashes, if all those riskier assets go down in value, I don't have the years to make that up because I'm about to retire. I'm also aging. So everything's working against me, and I need to protect myself against the risk. And a really practical example of this is right now here in 2022, we're suffering one of the worst starts of the year for stocks ever. It's really bad. In fact, most of the major indexes are in a bear market, which means that they're down over 20%. So imagine if you're 63 or 64, you're about to retire, you've accumulated $1.8 million, and then in the start of the year, you watch your account drain down 25%. That would suck. So what target date funds do is they start to taper risk over time. And they do this by reallocating the balance of stocks and bonds within the fund. Now, bonds historically have a much lower return, but they're also less volatile and there's less risk. And so some of that money starts to shift over, and it does this in this kind of nice fashion until the target retirement date, in which you are pretty much in a protected, less risky allocation where your money is going to roughly, hopefully grow, not depreciate, and set you up for retirement. A cool thing about target date funds is they do this rebalancing, and sometimes they do this every few months. And this makes sure that that mixture is properly allocated for those risk goals as you get older. And this is all done for you. And I think that's one big value to people who get really intimidated by investing and saving for retirement. They don't know what they should buy. They don't want to think about it. And in fact, it stops them from doing this in the first place. And I think that these target date funds really were a product and a solution for that. It's, hey, we'll handle this. This may not be the best thing you could ever invest in and do, but it's not going to be terrible. And so at least you're in the market. At least you're managing risk. At least you have diversified assets. And that's better than most people. So if that sounds like a set it and forget it easy thing, this is probably a good option for you. And you can access these target date funds through your employer, typically in your kind of investing 401k plans. That's probably where you maybe have seen these in the list of things you could own. But you can also access these things through something like Vanguard, which is something I used to do, the VFIFX, which is the Vanguard 2050 Target Retirement Date Fund. That's what I've personally owned in the past. My wife has one through Fidelity. Hers is a little bit further out because she's younger than I am, but that's how it works, and it's pretty cool. So I would encourage you to check out what options you have and see if this is something that you think makes sense for your situation. Okay, and that is a quick overview of target date funds. If you'd like me to do a deeper dive into a specific fund, for example, let me know in the comments. Maybe you have one you're investing in your current 401k. I can give my thoughts on that in another video. Just let me know, and I will reply to each one of you. We'll be back here next week with another video. Consider subscribing so you don't miss out, and I will see you then.